Okay, welcome everyone. We'll start our session. Today lesson will go through learning outcome 2, as you know me, and learning outcome 2 is be able to assess the impact of relevant taxes in a given situation. So today is more about the tax planning, how we can plan the tax in different situation. Of course, there can be number of scenario and number of situations. So please, you can extend and expand your knowledge, yes, by looking the different understanding question within the handbook, which I just sent you yesterday, and I'll refer you some chapters today again. So it's good to be carry on doing some activities. Okay, so in the previous lesson, we'll do a bit recap. Always good to be a bit recap what we discussed during our last lesson. We discussed popular people chat in office. We discussed ethics. So of course, as an accountant professional, ethics is very important in any profession really, because ethics will help us to grow as a moral principle as well towards society and as a professional bodies. So popular people chat in office to remember easily the word PPCIO, professional behavior, professional competency, DUCAT. That's the huge up-to-date knowledge. This is very, especially in tax, everything like recent, lot of changes happen and carry on happening due to the COVID-19 HMRC rules, and we're supposed to be up to date with the knowledge. So keep an eye, and upskilling. Confidentiality, of course, there's other issues because it's very difficult now, especially we are going to be digital and need to be make sure, how our system are secure. Integrity, objectivity, a bit, I mentioned you parent company, which is own and control other company. Subsidiary, if you have 50% shares in other company, is called your subsidiary. Associate is if you have 19 to 49% shares in other company, that's called associate company. That's further we'll go through these, and we discuss about personal allowance, the last lesson, and we mentioned the limits. Yes, personal allowance we mentioned 12,500 was, yes, it's extended now 12,750 if I'm right. Further you can recheck it, clarify
No,
please.
it's 12,570.
12,570, okay.
Yeah.
Thank you.
Okay.
12,570.
70. Sorry.
No, that's fine. 1270, I was looking at the way around. Okay, so 1270, and we discuss, between 1 to 37,500. Yes, after the tax limit is a 20% tax. Yes, if you earn, so you can add it in these. You can say somebody, oh, at 50 plus 50,000, is it make 50? No, 37 and a half plus 12 and half. Yes, of course, 70 pound there as well. So that's you can consider, and you can plan your tax, because today the tax planning in the different situation you can advise to someone. Okay, then further we mentioned if you earning more than 100,000, any pound you earning more than 100,000, you divided by 2. Yes, that will reduce your personal allowance.
Yeah, that's fine.
That's we discuss about various other, like we discussed dividend income 7.5, yes, and 32.5 for the high tax band, that's we need to look around further. We discuss about benefit in kinds. That's other area is a huge, look around. We discuss inherent tax. That's the limit we really need to go back, and check. Normally it's 325,000 is the exempt limit, but it can be varied. So further we need to look around the scenario. Okay, these were the key, which we discuss and calculate. We discuss overseas income. Yes, we discuss the rule of we discuss what is, yes, so we discuss about control. Yes, that was the key, where head office, Thus, we need to be look around head office, and further we discuss residency. Yes, last lesson as well. Residency rules 183 days. Yes, that's we need to further. You can look around somebody's domicile, control, linkage, parents. Yes, nationalities and all these also matters as well in a tax return purposes. Okay. Any question, anyone? Okay, so we yes, please.
I think I was looking at the what we discussed, the inherent tax aspect that has to do with the domicile. What really they refer to the domicile and non-domicile. Or probably we might handle that later.
Yeah, so we can further enhance our understanding. I copied the link, at the end. Yes. So which is purely inherent tax, and I can refer you back, and we can look around. The domicile, of course, is the requirement any tax purposes, and you resident or not. Huh?
Okay.
Because the inherent, the property is being and where you
transfer. Okay.
Okay, so today lesson, test your knowledge, tax return. What do you think? Scale 1 to 10. Always good to be reflect. Yes.
Yeah.
We all okay. What do you think? You're on 5, you're on 6, you're on 7.
7.
7. Okay, good. I guess anyone else you want to reflect as well, please? It's good to be
5, 6.
6. Fair enough, because we all on
probably 6 as well.
6 as well. No, that's absolutely fine. Okay, so next today lesson, indicative content is the key to achieve the required and supplied taxes applicable into the specific situation. Alternative ways to be achieving the personal and business outcome, learning to the different taxes consequences. We'll go through various alternative scenarios can be in a real world, advantages and disadvantages of planning, corporate and incorporate businesses. Yes, why we need to be registered as a company. Yes, it's a separate legal entity, limited liability, but what is the curtain the veil uncurtain? So that's other issue we need to be, because even the company can be if the court will give the order. So that's so we have indicative contents. We'll go through all the scope of corporation tax, taxable total profit, chargeable gains can be, which we further carry on doing these activities, but is also in learning outcome 2, scope of sample taxes, liabilities arising, and we'll go through the VAT. So that's given in our today lesson indicative content as well, which will carry on referring back what we already discussed, maybe a duplication, some things carry on happening. So basic interest, these bands we discussed already. We discussed residency rules, we discuss about fuel, we discuss about cars as well. We mentioned the 45p mileage, individual saving, yes, up to 20,000 limits. Yes, certain those can be exempt from taxes. Basis restriction, 75% finance cost relating to the residential property income. That's pension schemes. Yes, annual allowance can be, so we need to be this carry on changing. So further we need to look around each year which finance act going to be applied to us. Okay, man pool, we discussed capital allowance. And okay, so corporation tax, that's the key which we'll go through in 19%. Yes.
Yes.
Okay.
That's the value added tax is 20%, 85,000 registration limit. You can deregistration yourself if you don't want to stay on the registration scheme. 83,000 if your turnover drop to. And inherent tax of nil band is 325,000. Resident nil band is 150,000. Lifetime rate is 20%. Death rate is yes, and then 7 years and the further rules will apply as well. Okay, so Yes, class one insurance, low rate. Of course, we discuss about capital gain tax. No, we not really mentioned, but today lesson we have a capital gain tax. Low tax rate is a 10%, and residential property 18%. Higher rate is 20% and 28%. Annual exempt limit is 12,000. Expenditure, entrepreneurial relief and investor relief can be, yes. Lifetime limit can be is 10 million and 10% tax rate. Okay, that's then we of course classes and deliberately, if you conceal the penalties, yes, consequences of not compliance, yes, that can be varies because somebody's past records and things also matters. So that's,
Okay.
we need to be look around, and this will be in our today discussion as well. Okay, so first we're looking 2.1 is apply the tax to the given situation. Yes, so we've been in different situation how we can apply the rates. So we'll discuss some situation, but you can expand, which we have a chapter tax calculation. Yes, that's which I'll refer you at the end of the lesson as well, and particularly we can look around some scenarios. Components, non-saving, saving, dividend. Yes, total of all components, net income, taxable income, tax rate. That's we need to be look around. Okay, let's we look this scenario, please. So for example, tax year 2021, Joe's salary is 46,500. Saving income is 2,000. Dividend income is 6,000. During the year, he paid interest 300, which was qualifying purposes. Joe implied deduct, through pay as you earn, yes, from his earning, and the income tax payable by Joe is. So what we need to do, we need to calculate, yes. So what do you think? What rate will be apply on first one? 46,500.
So non-savings income. So there'll be a non-savings income,
Yes.
and it got personal allowance.
Yes.
We have a personal allowance of £12,500.
Okay, so we need to minus that.
Yeah, and I'm thinking of the interest he paid, the £300, which was for a qualifying purpose.
Okay, yes, well done. That's a good thinking point. Yes, we need to think all the areas. Yes. So first of all, employment income, we state right employment income. So non-saving, saving, and dividend income, 3 headings here.
Yeah.
So we have non-saving income, well mentioned. Yes, that's will state record. Saving income we have 2,000. Dividend income we have 6,000.
6,000.
Interest paid. Yes.
Yeah.
That's 300. Yes.
300. Yeah.
And 12.5. Yes.
Yeah.
That's paid. So total taxable income from non-saving income, yes, that's 33,700. So the rate we need to look around, yes, 1 to 37 will be applied 20%.
Yeah.
Then 2,000 we need to look around the saving income. We can look around if we have for this exemptions, and 6,000, and that's all the taxable income. And now we from this total income 41,700 we need to calculate the tax liability. Yeah.
Yeah.
So now what we said, how much was the 33,700? Yes.
33,700.
Which is 20%.
20%. Yeah.
And then 500.
There's no
0, 0. Yes. Why will be 0?
Yeah, because the threshold, it's first, the 20% is from 0 to 37,500, but his income fall within that threshold. It doesn't exceed 37,500. So there'll be
So
zero.
that will be the saving side, exemptions. So we need to look around because we have saving income as well. Yes.
Savings income. Yeah.
So we have a limit there. Yes. 2,000
Yeah.
and
2,000.
we have 1,500. Yes.
Yeah.
So we minus from, yes, first 500. Yeah. So then 1,500 will be charge the tax 20%.
20%. Yeah.
Remaining. Then dividend,
Dividend. First 2,000 is nil.
first 2,000 is nil. If there
And
is
then
no other income like employment income, then rate will be
Yeah.
7.5. Yeah.
yeah,
Up to-
7.5. Yeah.
And otherwise will be 32.5. Yes.
30.5. Yeah.
So 4,000, 6,000 is the dividend, 2,000
Minus
is the
2,000.
supplement because it's a basic taxpayer.
Yeah.
It's not higher taxpayer, so it will be 13.
Yeah.
So
Yeah.
total tax liability 8340, but already paid through PAY,
PAY. Yeah.
and then income tax
680.
liability will be this.
This, yeah.
Anybody, any question? We all okay? Yeah.
Yes.
So
Yeah, I
that's
think
that's we need to is further is being explained.
Yeah.
Okay, then that's we can put more scenario when we'll do the actual assignment. Yeah, if you want to be compare and contrast, that's all the planning. Okay, so yes, sometime people ask, oh, which example? Yes, you can pick example from, and if you want to be, don't, of course we can't really use the client examples, but you can change the names. You can, yeah, put Mr. X and Y instead of individual names. But these example came from the books, so it's no harm. So we need to look around the advantages and disadvantages of different course of actions. Yes. So can we look these examples? Yes, we've been given Donald and Teresa in this married couple. Yes, have a regular annual income 60,000, and then they have salary, interest, and dividend. It is clear from the above information who is the higher taxpayer. Yes, with the taxable income is 47,500 minus, when we'll do 12.5. Yes.
Okay.
Then basic tax rate applied to Teresa, 16,500. 18 is coming from salary, 2 is from, yes, interest, 9 is.
Interest.
So if we'll minus 12.5, yes.
Yeah.
So 16.5 will be left. So in this situation, it would normally be the case, the tax planning purposes, it would be advisable to see if the investment income could be moved from higher rate, yes, taxpayer to the basic taxpayer.
One thing I'm picking up, this interest doesn't specify what kind of interest, because interest from the NS and I.
You're absolutely right. So we need to ask the question further.
Question. Yeah.
So like here, we've been given further. This, however, is not possible. Donald only income is a salary. Yes.
Yeah.
So if he's had the interest income, yes, then we can say, okay, why not move the money towards Teresa? Yes. So she will pay the basic rate. The introduction, yes, of the nil rate band. However, the above tax saving can be achieved. Firstly, 500 interest on the income could be made by, yes, Donald, and therefore use his saving income nil band 500 that is currently being wasted. Yes. Because he is also basic taxpayer. Yes. So because 500 he can claim, So as a partner, so we can, the income is being taxed at 20% on Teresa, as she's saving income is excess of nil band, which is 1,000. Yes.
Yeah.
So 2,000 minus 1,000 and then 20%. Yes. So if she transfer 500 to her husband, he would use the nil band rate. Yes. And she would save 20% is £100. Yes. What other scenario can be? Other scenario can be, we need to look around marriage allowance as well. Yes. But in this case, they are using, of course, their income is higher than the personal allowance band. That's other, we know all, we dealing maybe clients. Yes. Marriage allowance. Yes. We all aware of marriage allowance. Yes.
Yes.
Okay. So if she transfer 500 to her husband, so he would use his nil band. Yes. So that's, all we looking planning. The second transfer would be sufficient share, move 2,000 dividend income from Teresa to Donald in order that both use their, dividend income nil band of 2,000. Yes. So that's, the case we can say. Okay, further, I copied the link for you as well. If you want to explore, please, you can, and we'll look in the chapters for further examples. Anybody, any question, please? We all okay? We get the concept, where it's all about the tax planning, which you already doing. Okay, next we're looking 2.3 obligation. If you don't fulfill or don't comply, what will be happen? Yes, we have a dates. Yes. When we supposed to submit the return. If you submit the late, of course, most of us knows. Yes. Penalties. Yes. Will be return more than 3 months, £10 per day, and return more than 6 months, but not more than 12 months, 50% tax due. Yes. And return more than 12 months late, 100% of the tax if the deliberately concede, 70% if deliberately but not, and 5% is due otherwise, is minimum 300. Any question? That's we need to look around. Okay, penalties for errors imposed if inaccurate return, carelessness, deliberately errors, yes, and arrangement to conceal. Amount of penalties can be, these are all the penalties we need to look around in details. Yeah, when it's applied. And yes, as accountant, you just rely on whatever the information you've been provided. Okay, penalties for the late notifications. Amount of penalties, yes, these are deliberately but not concealed. Careless, yes, all these are, and the times is attached with it. That's we need to be look around as well, please. Okay, record, yes, as we mentioned, record record must be in journal, be kept, yes, 5 years after that date following tax year, and concern where the taxpayer is the business or has a rental income, or 1 year after 31st January following tax year. Otherwise, failure to keep the record could be leads to the penalty of 3,000 for each tax year concerned. That's, we need to look around. Okay. Payment of amount must be made on the 31st in the tax year and the following 31st July. The final payment must be made on the 31st January following tax year. And you all know the payments. If we don't do it, what penalties can be. Okay. Yes, always we need to look around the interest and the late payments. Okay, so not more than 5 months after the penalty date, 5% of unpaid tax. More than 5 months, 10% and 15% can be. And these, yes, of course, further we can write to HMRC, and yes, sometime for the client purposes, and the argument can be happen. Okay, non-compliance may be result of fine, yes, litigation or other consequences for the client may have material effect of the financial statement. So important, such as the non-compliance may have avoided public interest publications. Can be implications, we need to look around in terms of the potential substantial harm to the investor, creditors, reputation, and all, we need to be look around in terms of especially so professional accountant who encounter are made aware of the matters that are clearly inconsequential are judged, by their nature, and you use the professional judgment as well sometime. Clients, that's, other area we can use professional ethics. Okay, anybody, any question? Please, you can stop me. You want to say something, please, you can add. Okay, then we have merit criteria to M1, assess the effect of the taxation financial decision made by individual. Yes, your business may become, affected by this sector taxes, which mean, it is important to show the complying with any sector tax obligation, as well as this. There are also opportunity to reduce your tax cost. We will, the look how the taxation can affect your business. We can discuss in our discussions, and we can share our knowledge between each others, and implies, don't often need to be spend, a lot of time of thinking about the tax and national insurance as the directly deducted, from. However, running your own business is very different. It is important that you take the responsibility for paying the correct amount of tax on your business profit in line with the national insurance. Yes, that's a huge area really further need to be explored. Corporation tax is charged on the profit of the company make. Yes, so you have to look around, when you do the planning, you need to be make sure yes, what sort of the business type of ownership you want to be. You want sole traded partnership or limited company. Yes, and the what tax rate, what benefit can be for the tax planning purposes, and you can plan the nature of the business as well. Yes, a lot of other environmental tax is happening, and what are the benefit. That's, huge area. We need, some people are businesses think this is a waste of money, and some think it's good for business. Okay, standard rate, of course, VAT, we can look around, reduce rate, and energy. Like, we know commercial energy bills, how much is the VAT, we all know. Yes, 20%. Yes, can we reduce this? Anyone, any idea? What do you think? Can we reduce this for the client? Okay, yes, if they have a property, yes, upstairs and downstairs, and they're using some proportion for domestic, yes, we can fill the form. It's called VAT reduction form, and that can be reduced to 5%. When it's reduced, then environmental tax can be reduced on the gas electricity bills. That's other is, around 1p, every unit is people are paying now, plus VAT as well. Okay, that's, the planning side. We can look around. Of course, domestic is a 5%, but on telephone bills always 20%. Okay, so that's then we have we can look around different schemes, which yesterday I mentioned you in our lesson. Annual accounting scheme. You have to decide, which accounting scheme for the VAT registration purposes. 135,000 excluding VAT to join this scheme, and you can stay on this scheme if is 12 months, up to 160 1.6 yes million. So we need to be look around the advantages, only one return. Yes, disadvantages, you have to monitor the supply. Yes, your turnover shouldn't be increased. Otherwise you will be moved to the other scheme. Cash accounting, yes, that's other. We have to look around the limit. Cash accounting is no bad debts. You don't need to bad debts claim. Of course, it's only receive and pay to HMRC, which is good in one way. Okay, cash accounting can be used with annual accounting. It means you can do one return in a year. Flat rate, yes, can be, but flat rate is a turnover limit 150,000 to up to 230,000. That's, you need to, and 1% can be discount as first year, registration. So these are the advantages, and disadvantages can be, because of course, again, limit and the rate you can't, only you paying on the output. You can't claim input. And the zero rated exempt, everything will be included. So you have to look around what sort of the things we sell, and then we need to plan and advise to clients. Okay. 2.1, evaluate how alternative ways to achieve the personal and business outcome may lead to the different, return. A company must be normally file, corporation tax return by being due date, which is later of 12 months after the end of the period accounts, and 3 months after the notice requiring return was issued. Yes, late filing as individual can be penalties. Yes, penalties for errors can be. So that's, further area we need to be look around. Okay, payments, of course, the payment dues. Yes, a company augmented profit above the upper limit can be. So we need to be look around, ignore the dividends from related 51%. That's, group structure in the corporation tax, that's we need to be look around. Consequences, if you want to work toward distension criteria, and we want, we can add some examples of these, the different limits. We can look around upper limit multiply by dividends. We can look around and we can proportionate, yes, according to research and development costs. Yes, can we need to be look around, yes, and we need to proportion, because the research is normally the expense, but the development is treating as asset. If you capitalize it, then of course you can relieve it, you can get the capital allowance relief as well. So that's further we need to be look around. Small, medium size and large size organization. Okay, IRS, IR 35. Anybody we are well aware of what is happening in sector? Industry, anyone, any experience you want to share about what is about this? Yes, please. What do you think? Yes, please. Is there any impact on your clients? What do you think? IR 35, please. Lot of discussion happening IR 35.
I had many clients working through their own limited company, and since 6th of April 2021, they were not allowed to work because of this IR 35 applied.
Yes, so they have to be consider, because they're like, the doctor locums and things. So employer need to be declared how much to whom, and they need to inform to, and all, the work and the tax purposes, because the people used to be a lot of inquiries, especially NHS, is because what NHS being paid and what the doctors and the nurses tax being paid through self-employed tax return. That's, the big issues. That's why, the lorries and driver shortage and things happen as well. One of the reasons, contractual and the tax consequences of these. Okay, that's, further we can look around the scenarios. Yes, various tax dues and planning purposes, opening years. Yes, first years and second years, and opening rules. Yes, is there any accounting period ending with the tax year? We need to look around. Yes, overlap profit. Okay, these closing year taxable profit. Yes, that's, total taxable profit we can calculate for companies. Of course, accounting period, we need to look around the tax planning. So this is few examples being included here, so we can look around overlap. So further to enhance, and with a lot of examples and scenario, please, I copied here link for you, ACCA articles as well. Yes, so please you can copy and further, and today we'll look again in our ACCA, the booklet which I mentioned you, and we look, the chapter and before next week, we can look around some examples from it, and that will help, you know, us to be further develop understanding. So please, you can look around with the book I send you. I'll just share with you, and we can pick, you know, 1-2 chapters. So of course, VAT we already mentioned. Yes, if you're dealing with the VAT, it's good to look around, please. Because even in the VAT can be different scenario. Of course, you know, helpline is always available if we have a doubt. Yes. Okay. So basic tax income calculation. Yes. Thus, you know, we have, if you want. Yes, chapter 7 is good to look around income from self-employed if you want to. Yes. Thus carry on. Yes, the chapter is for corporation tax calculations. We have a chapter 13, please. Yes, the chapter 13 for corporation, if you want to look around, is good too. Okay, then VAT, if you want to look around, please. That's, you know, we have chapter 25 with some scenario. Chapter 2, which is basic, we discuss some example. If you want to further look around, that's, you know, the basic calculation about tax. So please, that's good to be enhanced. Yes. So chapter 2 is a basic calculation of tax, which we said. If you particularly want to look around employment, property income, so we have a separate chapters. Yeah. If you want to enhance your each area, and corporation tax, you know, we said that chapter is good to be look around, and the VAT chapter. So that's all today from my side. Anybody, any question, please? So today's key, you know, we learn about how we can plan tax. Of course, you know, we need to look around the basic rules of tax. Yes, and then we can give advice to clients. And of course, VAT side, you know, we need to look around which scheme is best for the client. And that's all, you know, today. Any question, anyone? Yes or no, please?
No, thank you.
Okay,
No,
thanks
all good.
for, please go through the look around chapter 2 if you want. Yes, chapter 13 and last chapter 25. Yes, so we can look around the corporation tax, we can look around other individuals, and if you want to be capital gain and further enhance, you know, of course you can look around each individual chapters, which will carry on doing next 2 lessons. So we'll cover, you know, most of stuff which we supposed to be required. And thanks for listening, and I'll speak you next week. Yes. Before that, if you have any question, please drop me email. Slide will be available on Moodle as well. You can download all the lesson recording, all backup resources already there. Thank you. Bye-bye.
Okay, thank you.
Bye-bye.
Bye-bye.
Bye.